Good morning and welcome back to Almus Market Mornings. The risk sentiment was quite positive yesterday after the S&P and Nasdaq had a strong showing, and similar sentiment went on to provide a positive sentiment for tech-heavy equities in Asia. It has been somewhat quiet on the geopolitics front, and in that time, we have seen the yen steadily trading above 162. Rupee saw a bit of minor weakness, but closed well below 94.70 yesterday, and gold saw some recovery after breaking the $4,000 mark. Good morning, JK. What's your sense of these moves? Are we expecting more dollar strength from here?
Good morning, Swaraj. So I think the recent dollar strength, as we have been mentioning, more led by the month-end and quarter-end factors, demand, from other currencies, position adjustments, etc. However, once we have seen the end of this quarter, we again saw the yields and the dollar index reassert themselves. This is retracing partially the pullback of last few days, and this pullback was mostly driven by oil price falling only. Particularly for the the yields, they are in the broad picture rising, with not only, oil, so the persistent inflation that is actually overriding oil-related price pressures. The other factor at play is one, that giving momentum to the yield is the dollar strength, sorry, the economic strength in the employment sector. More of that was in evidence yesterday as the monthly JOLTS data showed job openings rising to 7.594 million, well above the 7.3 million that was the consensus, and that's the highest in the last 2 years. So at the same time, number of unemployed workers also declined from 7.373 million to 7.307. So this is the fifth consecutive upside surprise in the JOLTS and eighth in the past 10 reports. So, of course, the recent World Cup factor also might have increased the labor demand, particularly in the lower strata of the economy. But if the trend persists where employers compete for smaller pool of available workers, we might see wages rise, and that can add to the inflation. So inflation on the one side and the employment sector remaining steady, both are supporting the yields. Now the 2-year yield and the 10-year yield have rebounded strongly from the lows that we have seen in the recent days when oil fell to the pre-war levels. Now, one more positive factor was that consumer sports consumer confidence index also rose, 0.7%. This is the fourth rise in 5 months, although the details did present a mixed picture as per the survey of the consumers. And, we had the FOMC meeting on 17th last month, and that was taken to be a hawkish surprise by the market. But since then, most of the Fed members that have spoken have all been supportive of rate hike, and we had a few members speak yesterday as well. So, US economy, higher inflation, stronger performance. The GDP came at 2.1% versus 1.6%. All these, good cyclical factors that is supporting the dollar and the overall markets as well. In fact, yesterday, S&P and Nasdaq, they posted the best quarter since 2020, and this has happened despite the Iran war. And with yields rising, dollar saw the month-end demand also was well met, and euro met strong resistance ahead of 1.1450, finishing the 1% correction that started from 1.1330. Another factor that is probably seeing the euro pullback is that indications from ECB that with the recent price fall in the oil, there may not be an urgent need to raise rate again in July. So again, the interest rate factor also playing for the dollar strength. And more importantly, dollar yen, which is now trading well clear of 162 mark. This is a territory well above the 40-year-old high for the dollar against the yen. Although the momentum remains a bit slow because the market expects some official action at some point of time, not all, but slowly the consensus is that the official action might be held back now that yen is not weakening on its own, it's weakening along with other currencies. So the broad dollar strength, led by cyclical factors, is also pushing the USD yen higher. So we may not see intervention immediately, and that keeps the market on course to push the dollar overall higher. Broadly, a supportive dollar atmosphere, and the Iran-US news also not much of a concern there. Recovery in precious metals might have been perhaps again due to the quarter and year-end factor. Now that is also coming to some sort of you know a reversion back to the downside. What we have seen in the at least in the last 5 6 hours, gold has stayed well below 4,000 mark, and that's a psychologically big factor. So then, if we break the 3,900 mark, we might as well see the 3,700 mark also. Essentially, they are in a strong corrective decline, which is likely to extend further. And silver yesterday corrected almost to 60, and this correction was to the steep fall that we've seen in the recent days. And I think there is a consensus that silver could move towards 52 also, and that is somewhere close to the multi-year breakout that we saw last year. Now on the rupee, although rupee has gained handsomely both on monthly and quarterly basis. If this month rupee has gained, and in the quarter, of course, it made a strong gain, but it is off the best levels because of strong buying from PSUs, importers, and even month and quarter demand also, including some debt repayment that has been rumored in the market. It was still a better performance related to the Asian peers. And Asian peers, some of them have actually been seeing close to all-time highs, all-time lows against the dollar. But the rupee, I would say, is holding steady, not strengthening much, because slowly that undervaluation of the rupee is also getting corrected. So that leads to a probably a stable rupee for some time. Appreciation may not be much unless we see bunched up huge flows, and that is not seen as yet. In fact, the market is still seeing how far the expectation of big flows due to the government RBI measures will be a reality, and how much the rupee will be allowed to appreciate, or rather how much the RBI will actually absorb out of these flows. But you should also be mindful of some of the uh, kind of deflating news, because uh, market now expects deficit rainfall in July as well, up to 6%, and this follows about 40% deficit of rainfall in the month of June. That is again not so encouraging for the economy and the inflation. Another factor is India's external debt rose, in the quarter ended March to 26, rose by 26.3 billion to 762.8 billion. If you can recall, our overall reserves, net of headline and forward maturities of RBI, is also close to this. So we are, the overall debt is close to the, the reserves that we have been holding. And of course, the ratio also, external debt ratio also increased from 19.8 a year ago to 20.8%. Puts the pressure on the exchange rate because of the repayment that is coming up. Also rose, 19.6, indicating modest deterioration in the external profile. Of course, short term, we are seeing in the month of June, foreigners actually bought much more bonds in terms of dollar versus the amount that they sold in equities. So that's some, relief in the short term for the rupee. But I think a broader picture still remains a bit tentative unless we see the real big expectation of the flows being realized, and dollar index trend also will play a big part in the overall rupees trend in the coming days. Finally, just to add one bit of news, that adding to a spate of court rulings that are going against Trump recently, US Supreme Court yesterday upheld the constitutional principle of birthright citizenship. rejecting Donald Trump's executive order that sought to deny automatic citizenship to children born in states. So, a lot of terms for Trump, because we know about the tariff which was not upheld by the courts, and even in the Lisa Cook case, court said that a Fed member cannot be removed by the U.S. government. So just a bit of news how the Trump's urgent action, or rather hasty actions, have been somewhat not working. Yeah, thank you.
Thank you, JK. And yes, a lot of rulings that are coming up on the judicial side, which Trump wanted to implement, but now because of the judicial side, it's not able to sort of go through the legislation. But apart from that, yes, we are looking at cyclical dollar strength. There are a lot of factors that are going in favor of the dollar. Higher real yields, inflation expectation is also slightly on the higher side, and that's why the Fed, uh, if you look at not just the FOMC, but even the recent speeches by Fed members, they have been on the hawkish side. So these are like good cyclical factors. They are supporting the dollar. Another like cross-border update is that ECB members are now indicating that due to the fall in oil prices, they may not require an urgency to hike rates, and that's also again adding to the dollar strength. And of course, we have the yen, which continues to weaken. It's above comfortably trading above 162. Uh, and for the rupee, for that matter, even though we are seeing the Asian peers of the rupee weaken, the rupee remains in somewhat of a range, and that may itself correct its undervaluation. That's it from us today. Thanks for listening. We will catch up tomorrow with the fresh round of updates.